Hello everyone, in today's video I will talk about Heikin-Ashi trading strategy. This Heikin-Ashi trading strategy uses a simple indicator that can be used by beginners and experienced traders alike. But if you are new on the channel, please subscribe to the channel, hit the like button and also hit the notification bell. Before we dive into the trading strategy, let's take a look how the Heikin-Ashi works. The Heikin-Ashi is a Japanese candlestick-based technical trading tool that uses candlestick charts to represent and visualize market price data. It is used to identify market trend signals and forecast price movements. The Heikin-Ashi method uses average price data that helps to filter out market noise. The absence of market noise results in a clear illustration of market trends and direction, which helps determine potential price movements. The trading technique assists traders in identifying when they should hold on to a trade, pause a trade, or identify if a reversal is about to occur. The main difference between the traditional candlestick chart and the Heikin-Ashi chart is that the latter uses a modified formula based on 2-period moving averages instead of open, high, low, and close prices. Hence, the technique generates a smoother chart, making it easier to spot trends and reversals. The Heikin-Ashi charts also obscure gaps and some price data. From the charts, we can clearly see the differences between the two. The Heikin-Ashi chart appears to have no gaps because the candlesticks always start in the middle of the previous candles. Additionally, the shadows of the Heikin-Ashi candlesticks are generally tighter in range than those of the traditional candlestick. This is because the Heikin-Ashi candlesticks calculate the average values. Meanwhile, the benefits of the Heikin-Ashi over the regular candlestick are: Number 1. The accessibility. Heikin-Ashi is one of the most accessible indicators that does not require any installation and can be found on any trading platform. Number 2. High chart readability. It is easy to interpret as any trader is able to read the candlestick patterns. Heikin-Ashi candlesticks are better deciphered than traditional candlestick charts, hence it's easier to identify market trends and movements. Number 3. Reliability. Heikin-Ashi is a very reliable indicator, providing accurate results. It uses historical data, which is also quite dependable. Number 4. Filtering of market noise. The indicator filters out market noise and reduces small corrections, making the signals more transparent. The smoothing effect makes it easier for trend identification. Markets are full of noise nowadays, hence, with the help of noise reduction, the Heikin-Ashi technique helps traders plan their entry and exit points more efficiently. Let's see the Heikin-Ashi candlestick signals. The Heikin-Ashi technique reflects the trend prevailing in the market through indicator signals. There are 3 main aspects of the Heikin-Ashi indicator signals: trend direction, trend strength, and trend reversal. 1. To identify trend directions. The green Heikin-Ashi candlesticks indicate an uptrend, and the red ones indicate a downtrend. Notice how some of the Heikin-Ashi candlesticks remain green even though the actual prices are represented by red candles. This tells us that an uptrend is still ongoing. 2. To identify trend strength. As I said earlier, there is a possibility that the Heikin-Ashi candlesticks have no shadows. Obviously, this phenomenon also applies to the traditional chart, though it is more frequent in the Heikin-Ashi chart. The shadowless Heikin-Ashi candlesticks are an indication that a trend is going strong. Using the above chart, we can see several green Heikin-Ashi candlesticks with no lower shadows, thus indicating a strong bullish trend. On the contrary, if we spot red candlesticks with no upper shadows, we can tell that the market is undergoing a strong bearish trend. 3. To identify trend reversal. The Heikin-Ashi candlesticks with small real bodies and large shadows, both upper and lower, indicate trend reversal. This signal presents an opportunity for aggressive traders who want to catch the reversals as early as possible. However, if you are a conservative trader, it's better to wait for confirmation before entering a position. The Heikin-Ashi trading strategy. Alright, now that you've learned how the Heikin-Ashi candlestick works, let's dive into trading strategy using this indicator. For our first strategy, we will combine the Heikin-Ashi candlesticks with a 100-day exponential moving average. The Heikin-Ashi candlesticks are plotted on the chart along with the price action. The 100 exponential moving average is used to identify the intraday trends. Prices closing above the 100 exponential moving average indicate a bullish trend, while prices closing below the 100 exponential moving average indicate a bearish trend. Any time frame is acceptable for this strategy. For buy positions, here are the rules. Step number 1, the Heikin-Ashi candlestick turns green. Step number 2, the price closes above the 100 exponential moving average as a bullish candle. Step number 3, enter a long position when the aforementioned two conditions are met. Step number 4, set the stop loss a few pips below the 100 exponential moving average. Step number 5, exit the position whenever the Heikin-Ashi candlestick turns red. The rules for sell positions are: Step number 1, the Heikin-Ashi candlestick turns red, indicating a bearish trend. Step number 2, the price closes below the 100 exponential moving average as a bearish candle. Step number 3, enter a long position when the aforementioned two conditions are met. Step number 4, set the stop loss a few pips above the 100 exponential moving average. Step number 5, exit the position whenever the Heikin-Ashi candlestick turns green. This indicator is particularly useful for trend trading and long-term strategies, but not for sideway markets and short-term strategies. To get the most out of the Heikin-Ashi candlesticks, we can combine them with other indicators such as the exponential moving average. Lastly, always check on the actual prices in order to minimize the risk. Thanks for watching. In case you have any questions, don't hesitate to ask in the comments. Please don't forget to like the video and subscribe to the channel. I'll catch you in the next video.